this is something that's really important to stress, because again, this is coming into the private sector as well, where you had a situation that an engagement was deemed to be caught by IR35 in the public sector. The 5% notional deduction that you could have previously on an inside engagement, that disappeared. So effectively what it meant was that the fees that you were generating from an engagement were 100% accounted for as either by tax and statutory deductions, things like apprenticeship levy, or it was your net pay. And of course, contractors very soon realised that if you went a whole year with engagements that were inside IR35, because every single penny was accounted for, where were you how were you dealing with your business expenses? And the reality was you were making no profit, no loss. So any business expenses that you incurred, insurances, accountants' fees, travel, stationery, whatever, effectively was coming out of the contractor's pocket, which is why so many contractors in the public sector, if they couldn't find work in the private sector, were closing their companies down and looking at some of the other options for contracting, which for contractors effectively were one of 3 or 4 different types of pay-as-you-earn route. So this is something to be aware of, because it's coming in the private sector where end clients are determining the engagement and the fee payer is making the deductions. You will lose that 5% deduction, and for a lot of people it just becomes pointless continuing through their own company. If we can move on to the next slide. So let's talk a bit more. Let's move on again, please, Andy, and talk about the changes to the rights and responsibilities. So what we're talking about are amendments to the existing legislation, which is Chapter 8, and the addition of Chapter 10, which was effectively came in for the public sector and will also apply in the private sector. So the first thing to be aware, end clients are the decision maker. Yes, there are a couple of exceptions to that, and we'll come on to those in a minute. But probably, I'm guessing here, but I bet I'm not far wrong, 95% plus of all engagements will be determined by end clients, who will have that responsibility from the 6th of April onwards. And in reality, they need to start exercising that responsibility now, because you as contractors need to know where you stand from the 6th of April onwards. And for some of you, that will determine basically whether you can actually accept that engagement or not. End clients that engage directly will also be fee payers, but in a lot of it, and just to clarify, probably something like 60,000 end clients are going to be affected by this, and about 20,000 agencies will be affected, and these are HMRC estimates, because the agency closest to the PSC is the fee payer, and the fee payer is responsible for making all the statutory deductions, tax, NIC, apprenticeship levy if relevant. And if they get that wrong, i.e. they pay somebody gross when they should have paid them net, then that's where HMRC will go to collect the additional tax and national insurance. But that's on the assumption that the end client has done their part and taken reasonable care in doing so, arriving at the decisions. So actually, where does that leave the contractor? Well, essentially, you've gone from centre stage, or you will be going from centre stage, to be, if you like, largely bit part, almost sort of acted upon. I think there are opportunities to influence your end client, but ultimately the decision is now going to be taken away from you in 95% or more cases.